US economic growth slowed in the first quarter of the year, but lots of people are writing this off as a temporary blip. Lots of nowcasts are already showing that the economy rebounded strongly in the second quarter, leaving the Fed in place to hike interest rates again. But Markit's PMI survey data are questioning the strength of that rebound. These PMI surveys, covering both manufacturing and services, did increase in April, but they've fallen back in May, down to levels that are indicating weak GDP growth. In this chart, we track our PMI covering both sectors against the annualized rate of US GDP growth, that's the bars. Now, we've highlighted here how in the first quarter growth has always seemed to be weak according to the GDP numbers. So lots of people writing that first quarter off as just another one of these aberrations in the data. But if we smooth the GDP data, as we see in the next chart, to iron out some of that volatility, you can see that the correlation with the PMI has increased. It's in fact 92%, so the PMI is acting as a very good indicator of GDP. And what's different this year is that that first quarter slowdown is inherent in both the PMI and the GDP numbers. And the weakness persisting into the second quarter is really a sign that the economy is not showing any rebound. In fact, the PMI signalling GDP growth of around 0.8% in the second quarter, so pretty much unchanged on the first quarter. Let's drill down a little bit further. We can see in this slide that the weakness is most evident in manufacturing, where our PMI is in fact down to its lowest since the height of the financial crisis in 2008-2009. So manufacturing acting as a major drag on the US economy in the second quarter. But it doesn't stop there. Look at services. Our next slide here shows our services PMI tracked against the same component of GDP. This index has fallen as well, suggesting that it's the domestic economy that's also starting to really come down in terms of its rate of growth. So second quarter's looking weak, that's up to May. June's not looking too good either. Our forward indicators like inflows of new business going into companies and their backlogs of work, they're all trending down as well. So it suggests that we're not going to see a big pickup towards the end of the second quarter either. On top of all this, companies are also pulling back on their hiring. Our employment index from these surveys was one of the weakest that we've seen over the last 6 years. So, negative signs for the US and doubts cast on the strength of that second quarter rebound.